Hello, traders. I want to talk to you about what's happening with the US dollar right now. Now, unless you've been living under a rock, it's fairly obvious that the US is engaged in trade wars, and with the US imposing steep tariffs at this stage, Canada, Mexico, and China, triggering swift retaliations from these key trading partners. Canada is slapping a 25% tariff on $30 billion worth of US goods, with plans for even more. Mexico was set to announce retaliation measures sooner rather than later, while China has already hit back with a 15% tariff on US agricultural products, namely wheat, corn, and pork. So, with the markets right now in turmoil, businesses are bracing themselves for higher costs and inflation fears rising, which may force the Fed to maintain elevated higher interest rates. The global economy is now facing a major trade standoff as I'm talking to you. So the key sectors feeling the heat right now, the auto industry, and agriculture, and the energy sectors. What's the market impact? Well, stocks are sliding with investors very edgy at best. So what's next? Well, probably more turbulence is ahead. Brace for potential, maybe, supply chain disruptions and inflation spikes. So will this escalate? The question is, will this escalate into a full-blown economic war? Well, of course, that is the question. The other question is the global money on the move? Clearly, investors are turning away from the US market, seeking better opportunities in Europe and China amid economic uncertainty and rising trade tensions. European markets like the Germany 40, the French 40, and the FTSE 100 and China's tech sector are all showing stronger returns, leaving the US stocks trailing behind. With US recession fears looming and geopolitical talks mounting, investors are indeed diversifying into global markets to protect their portfolios. So again, is this the start of a massive capital shift? Well, we've certainly seen the dollar weaken. This reflects the market's assumptions about how the tariffs will have a negative impact, not just on external growth, but how it could potentially have negative impact on US growth as well. Again, with the US broadening its tariff regime to Canada and Mexico amid weak domestic activity, this is preventing the dollar from strengthening on this tariff news. Safer havens may very well be the yen, the euro, the pound, the Swiss franc. So is it time to look beyond the US for better opportunities? Well, the market certainly thinks so. Certainly, without a doubt, these are most interesting times to be trading the global financial markets. And perhaps it's that old saying, obviously trade with caution. And remember, being out of the market is a position. And right now, it very well may be the best position to be in. Thanks, guys. Talk to you soon. Bye for now.